Hi guys, welcome back to the channel. It's Coingraphy here. Um, Yesterday was rough. I took two losses trying to catch longs on EURUSD. The signs were there, and you know, I I didn't see the signs, but today I would show you how what I'm looking at and why my bias has changed to bearish. Because if you had watched my previous video about trade breakdown about my weekly outlook, you would see that I was looking for buys to the previous week's high and then these highs here, but my bias has changed because of some signs, and if you stick to the end of this video you would see what I mean and why I am looking for buys, why I'm looking for sales now rather. This is why I journal trades. This is why traders review their trades. They don't just sit with the loss, they try to find out why they took those losses. And I have seen the signs, and I hope price, and this is what I'll be looking at and where I'll be taking my next entries if price continue moving lower. Now you have to move all the way to the monthly time frame. As you can see, the monthly time frame order flow is bearish. Why is it bearish? We are rejecting highs, right? We are rejecting highs and we are breaking lows. As you can see, we're rejecting highs and breaking lows, right? What does this mean? This means the order flow is bearish, right? So now, looking at this order flow here, we broke this low, right? And then we rejected this high, which means what? Price is bearish. Now we have a monthly time frame order flow. A monthly time frame order flow. As you can see, we had this order flow, and we plotted the Fibonacci, and then we have an OTE level. And now at this OTE level, right, we have an order block. Why is this an order block? Because of this. As you can see, price starting to hit and then now broke below again. So this is an order block just below the minus 0.78 region. Now price now went higher, right, to that region. Now what does this mean? This means price should reverse from there, right? Now how do we know that price is going to reverse from there? Now let's look at this this current price action. We have this range on the monthly CLT. We have this range on the monthly time frame rather. Now why is this a range? It's a range because from the monthly time frame to the daily time frame, that's our time frame alignment, right? We had a CISD. This formed a CISD, which means price wants to move lower, right? Now price moved to the 50% of this range, right? Price moved to the 50% of this range, and I was like, okay, since price moved to the 50%, I am looking for sales. I'm looking for buys because we had another CISD when price tapped the 50% of the range. When price tapped the 50% of the range, I was like, okay, price should move higher since we already had a CISD here, right? But not looking at the fact that we are in a bearish scenario on the monthly time frame. This whole movement was just a retracement. This whole movement here was just a retracement, right? And it was not the real move of the market. The real move of the market is the sales. As you can see, the long candles that we are getting now from the sales, right? So knowing this now, my bias has changed to bearish, right? At first, this was my first target, this low, but we traded to those lows today, this morning, and and we had no opportunity to sell to those lows. So what I'm looking at now is for price to move, right, to move to this fair value. If this forms a fair value gap, right, if today closes like this, it should form a fair value gap. So price move to the discount of the range, right, and then move lower or expands to the premium of the range into this other block, right, to this other block, and we move lower, right, to these lows, that I mentioned here. So let me show you the trade I tried catching yesterday to show you what happened. Okay. So this was the trade. Let's move this back to 5. Yeah. Okay. So mind you, I was looking for this high as my draw on liquidity yesterday throughout this week. Coming into this week, that was my draw on liquidity, right? Now we had an order block. We had an order block, and then I was expecting price to, take this low, right, into this fair value gap, and we move higher from there. And as you can see, price smashed right through it, taking all of it as liquidity. Now, why did price react from this place? If you'd ask me, price reacted from that place because from the daily time frame, using time frame alignment, right, we had this. We had this, right? And as you can see, price went to take the previous month high again. Price went to take the previous month high again. What does this mean? This means that price wants to move lower, but I did not see it because I was focused on buys, and then we closed above on the monthly time frame. But that's that. And so this is why price reversed from there, because we closed below, and then we had a CLT here on Thursday. This from the CLT, right? This from the CLT, and price reacted from there. Price reacted from this other block here, right? So that is why price moved lower, and then Friday actually closed inside of this range. So I was looking at this as my range also, if you could remember from our previous video. But Monday went to take Friday's high and dumped from there. So that is why price reacted from that place. So that's what I'm looking at. And now that price has taken this low rather, I am looking at a small retracement to continue moving lower. If you look at the 4 hours time frame, we still have the 1 a.m. CLT still forming. So that's what I'm looking at. So I'm looking at key levels, bearish key levels, bearish order flow, and bearish CLTs to move lower to these lows that I mentioned. So that's what I'm looking at this week, and that's why my bias has changed to a bearish bias, a bearish scenario, because I was so boxed up in the weekly, the daily, and the 4 hours time frame that I never stopped to look at the monthly time frame. So always remember, the higher time frames is always bigger than the lower time frames, right? Thank you very much for watching this video. I wish you guys a very good week.